My dad, he wanted to retire this year. I actually retired my dad, which was like the coolest feeling ever. His big thing was like, I want to leave this house to you kids. Pay your home off really slow. Don't pay it off fast. You can't use it unless you get a refinance or an equity line. He wanted to like pay this house off so when they pass away, they can give something to us kids. We don't want the house. We're just going to sell it to get the equity. So I told him, I'm like, Dad, do a reverse mortgage. Your balance will slowly go up, but you've got no payment.
Wherever you guys are watching this show, I would truly appreciate it if you follow or subscribe. It helps a lot with the algorithm. It helps us get bigger and better guests, and it helps us grow the team. Truly means a lot. Thank you guys for supporting, and here's the episode. All right, we're talking infinite banking today. We're about to save you guys a ton of money. Devin Burr in the building, my man.
Thank you for having me.
Absolutely.
Love being out in Vegas. I try to stay away from the casinos.
Yeah.
I don't like losing money, and I lose it every time I gamble.
You're all about saving money, which is infinite banking.
Saving money, but also spending it at the exact same time. It's such a crazy thing. Most people think you either do one or the other. You save your money or you spend it. You save your money or you invest it. You spend it or you invest it. You can't do both, right? Infinite banking allows you to do both. You can save your money, but then you can also spend it. You can also invest it. So you figure if you're saving money and it's growing and you're investing it and it's growing, you're growing your money in two places at the same time.
So a typical person just has a checking account, maybe a savings account. Walk me through the difference with infinite banking.
It's kind of the same thing. I mean, think about a checking account or a savings account. You deposit money into the account and then you can go use the money right away, right? The difference is with a checking or savings, you get 0.06% growth.
Yeah.
That's the average. There's no protection against lawsuits or judgments. So if you get sued, someone can just take that money. But that's what we've been taught to do is we've been taught to put our money in the bank because we can go use it right away.
Yeah.
But with infinite banking, it's the same thing. You put your money into a place where you can go get it right away. You can use it right away. It's liquid. It's protected against lawsuits and judgments. So if you've got millions of dollars here and someone tries to sue you, they can't touch it.
Wow.
It's a private contract between you and the account. So can't be touched. So it's safer than a checking or savings account. Instead of it growing at 0.06%, it grows on average around 5 to 6%, tax-free. So you figure without taxes, you're actually making around 8 to 9% if you were getting taxed. Once that tax is gone, you're at around 5 to 6.
Right.
So 5 to 6 without taxes is kind of like making 8 to 9, right?
Yeah.
And you can go use that money and still not interrupt the compound growth. So we're both young guys. Like compound interest is something that just takes a long time to really see the fruits of. Warren Buffett's a prime example of it. He's been investing for so long. He's so wealthy because of time. Right? So if you give money time to grow and compound, it becomes a big amount of money. So with infinite banking, you can allow money to do that, compound and grow at that 5 to 6%. Tax-free while it's protected, while it's sitting there, and you can go use it somewhere else at the same time. So you're making that growth and you're doing other things with it at the same time.
That is so fascinating. The protection interests me a lot because as a business owner, you know, we have tons of liabilities. People come after us for having a following, for saying the wrong thing. So that's cool that money can't be touched.
Dude, I learned that the higher up you get on the flagpole, the bigger of a target you are, right? So yeah, when you start getting assets, when you start getting a following, when you start getting these different things, people want to naturally come after you. But if you have things in place where you're protected, like infinite banking, where your money's protected against lawsuits and judgments, and then putting more things in place like trusts, like we've got trusts for everything. So I don't really own anything. I just control it.
Right.
And when it comes to wealth, the more control you have, the less risk you have. So that's the main thing with infinite banking is having total control of your money without ever interrupting its compound growth.
Yeah. So that being said, where do you put your watches, your cars, your houses? Is that in a trust?
Yep. So I have a business trust and a family trust. So with my family trust, like my mortgage, my house, my primary home is owned by that family trust. Second home, vacation home, that kind of thing. I don't put my cars because then it opens up liability to the trust. Because cars move around, you can get wrecks, right? So my cars I don't put in the trust, but yeah, like watches and things like that, those are owned by the trust. And then I have investments owned by my business trust. So I'm protected against lawsuits and judgments and things like that, but I'm also protected against taxes.
Yeah.
Because let's say I've got an investment property, just easy math, just arbitrary numbers. If it's worth $1 million sitting in the trust and I sell it for $2 million, there's $1 million of capital gains usually, right?
Yeah.
Within a properly structured trust, you can negate those taxes legally.
Wow.
It just has to flow a certain way. It's got to be all by the tax code, but the tax code is written on how to pay less taxes. There's only a small portion of it on how to pay taxes. But most people just think the tax code is about paying taxes. It's literally about how to not pay as much.
Yeah, there's so many incentives that people don't know about.
Yeah, and it's just, I forget who it was. I think it was Bill Gates said, or maybe it was Donald Trump, one of the two, said that the reason why he doesn't pay as much taxes as other people is because he just knows the tax code better than everybody else. That's it.
Yeah.
If you study the tax code, you can figure out how to pay less taxes. And the biggest eroder of wealth are taxes.
40%, 50%, some states. California.
And think about this. You're taxed on money that you make. So before you get it, they take it. Then you're taxed to spend the money. So you've got sales tax.
Right.
And then you're taxed on things that you buy with the money that was taxed.
Property tax.
Right. It's insane.
I just paid a tax on my car, just $1,200 a year apparently for registration, just to be able to drive it in Nevada.
It's crazy. Taxes are like the biggest scam ever, but it's just.
And you don't even know where the money's going to. They say where it is, but you don't actually see it or control where it goes to. You know what I mean?
Right. That's why I like infinite banking so much, because you control where your money goes, what it goes towards, how you use it, and you just negate taxes. So you pay taxes once. Like when you make money, you have to pay taxes on that money. There's ways to pay less of it, of course, but you have to pay taxes at some rate. Then the money goes into infinite banking, and you never pay taxes again. It grows 100% tax-free. You can use it 100% tax-free. And then the beauty of it is it's tied to a death benefit. So we're all guaranteed to die. Right. We just don't know when. I believe I'm going to live to like 150. I'm a firm believer of that. But it's going to happen at some point. When I die, my family gets a tax-free death benefit that goes into a trust that then buys more life insurance policies that grow tax-free, that they can use tax-free. And then when they die, it's paid tax-free.
Wow.
So my family is just going to get wealthier and wealthier and wealthier because of what I set forth at the ground level in my 30s.
And that's what the elite families use, like the Rothschilds, because otherwise you're paying death tax, which is pretty high these days.
Yeah, estate tax.
Yeah, which is crazy that they even do that.
I think it's above $21 million.
Oh, really?
So like there's no income tax
Okay.
on a death benefit. So let's say your death benefit's like 30 mil. There's no income tax on that, but above 21 mil, I could be wrong on the exact number, but I believe it's 21 mil. So the 9 million would get taxed on estate tax. But it's like, at the same time, if your family gets all that money a little less because of taxes, they're probably still going to be okay. But if you can not have to pay it and leave them more, it's better.
Might as well. Yeah. So when you say you're able to use the money, are you taking a loan or a line of credit out and leaving the money in the bank?
Great question. So as I said, it's tied to a death benefit, right? The insurance companies know we're going to die. They just don't know when, right? So because they know that you're going to die at some point, they'll let you borrow from your future death benefit and you never have to pay it back. That's that control piece. Because if you never pay it back and you pass away, which is going to happen, they just don't know when, they'll just deduct what you didn't pay back.
Interesting.
So let's say your death benefit's $10 million. You use $1 million. You're borrowing against your $1 million or your $10 million. You never pay it back. When you pass away, they'll just pay your family $9 million instead of the full 10.
Interesting.
Because you used $1 million of it while you're alive.
And there's no fee?
No fee. I mean, there's interest they charge you.
Okay.
So you're borrowing from the death benefit. You're paying them interest to do so because you're not using your money. You're using your future death benefit, their money. See what I'm saying?
Yeah.
What you do is you put your money into the account, the policy. That's what you're using to control all the money. You put the money there. That money is collateral to get that loan. See what I'm saying?
Yeah.
Kind of like if you bought a house. Like the house is the collateral to get a loan from the bank. Your money's collateral to get a loan from your death benefit. Make sense? Mm-hmm. And then because you're not using your money, that's how it continues to compound and grow, because you're not using it. You're borrowing against it. See what I'm saying?
Right. Wow. This is cool setup, man. So you're able to sleep at night knowing I'm good.
Yeah, dude. Right now, I think it's like $40 million is what my death benefits all come out to.
Wow.
So if I were to pass away tomorrow, my family's hooked up.
40 mil?
Yeah.
Jeez.
They're good.
Yeah.
And I've got everything in trusts and everything's set up to where, like, my daughter is 16. I just had a newborn. She's 2 months. Mm-hmm. So if I were to pass away tomorrow and my wife was to pass away as well, and my daughter got $40 million, it's a bad look for a 16-year-old, you know?
Yeah.
So the trust dictates that she only gets a certain amount at a certain age.
Smart.
You know what I mean?
Yeah.
And that way it's just, you hit it. Like the elite families, the Rothschilds, the Rockefellers, they get wealthier over time because they know these different things, trusts and life insurance. So their wealth perpetuates, while most people, it erodes by the second generation.
Right.
So like if I left $40 million to my kids with none of these trusts, none of these things in place, they'd probably be broke within that generation.
Probably.
Because they'd go buy Lambos, they'd go buy some stupid crap. Yeah, just dumb stuff, right? Because they don't know how to control the money. They don't know how to multiply it. They don't know how to protect it.
Yeah.
But what I've set forward, now it's like the trust dictates how it's going to be spent. So now my family can't go broke because they have to abide by the trust. You know what I mean?
I love that. And a lot of parents, I feel like they die with that uncertainty of leaving nothing or little for their children.
Yep.
But with this structure, you know, you did everything you could.
Yep. Yeah, like my dad, he wanted to retire this year. I actually retired my dad, which was like the coolest feeling ever.
That's awesome.
Being able to retire him. And his big thing was like, I want to leave this house to you kids. So he's on a 15-year mortgage. It's like the dumbest thing you can do, in my opinion. Pay your home off really slow. Don't pay it off fast, because then you're trapping money in the equity. You can't use it unless you get a refinance or an equity line.
Right. So you like the 30-year mortgage better?
Yeah, pay it off really slow. Put as little down as possible. But he wanted to like pay this house off so when they pass away, they can give something to us kids. We don't want the house. We're just going to sell it to get the equity.
Right.
You know what I mean? So I told him, I'm like, Dad, do a reverse mortgage. Your balance will slowly go up, but you've got no payment. Enjoy your like life while you're alive. And since the balance slowly goes up, so does the value. You see what I'm saying?
Yeah. So
like when you pass away, there's still going to be equity for us kids, but you can enjoy your life while you're alive.
Right.
You know what I'm saying? So it's just cool to learn these things. And then I wish my parents taught me it, but I'm teaching them, which is just cool. And then I can retire my parents is a good feeling.
That must be a great feeling, man. Yeah, my parents were immigrants, but they just worked and saved their whole lives.
Where from?
My dad was from Ireland. Mom was from China.
Okay.
Yeah. Mom used to scrub floors in the kitchen, didn't speak English, came here with $20, dude.
Really?
Yeah, isn't that crazy?
Wow. When?
She was just out of college.
Wow.
Yeah, she became high up sales for a company called Ericsson. I don't know if you heard of them.
And this was out in Vegas?
She moved to somewhere in the West at first. Then I grew up in Jersey. Got it. Yeah.
Okay.
But it was interesting, man. But being able to grow up in immigrant household, I attribute a lot of my success to that, to be honest.
That's what you hear is like the immigrant mindset, where like just the American dream is something that's still real,
I think
right?
so.
It really is. And you know how like the American dream started, right?
No, actually.
So back in the day, like the American dream was to come here and be an entrepreneur, run your own business, you know, make it. And that changed when the Rockefellers and all these big families needed more employees. So they indoctrinated the modern schooling system, right? So you'd have people going into schools to become employees. So they were pumping out more employees to build their companies. You know, the oil industry, and I forget the other big name back then. But that was the American dream. Everyone was going to be entrepreneurs. Right. Now, the American dream is get a good job, go to school, get good grades, save in a 401k, dumbest thing you can do, and hopefully have enough money to retire when you're 60 years old.
Yeah.
That's the American dream now.
it's changed, and I hope it reverts back to the old one you mentioned.
Probably never will, because I think there's people pulling strings at the top.
Yeah,
but
that's a whole nother conversation.
100%.
I'm glad you talked about the retirement account. My account used to tell me to contribute to the IRA and whatever, and I'm like, I don't even know if I'm gonna live to 65, dude. Like, right. Just being honest. And also, by the time I get there, me spending money at that age won't feel the same as it does now. You know what I mean?
Yeah.
It'd be more about giving it to my family at that age, I feel like, than spending it on myself.
Well, if you really stop and think about like a retirement account, at its core, it's really, really stupid. Most people it's what we're taught, so we do it. But really think about what it is. If you think about like a 401k, you're giving up control of the money now to have access to it later, right? When is money worth the most?
Now.
Inflation erodes its buying power. So like, let's say I'm 38, almost 39. So if I put in a 401k, I'm giving up control for 20 years. That the dollar is going to be worth so much less in 20 years. So I'm giving up control of being able to use it now when it's worth the most to use it later when it's worth less. Stupid. I'm told to do it because I can take a tax deduction. So don't pay taxes now when you know what they are, to pay them later when you have no idea.
Right.
Do taxes go up or down?
Up. Are you interested in coming on the Digital Social Hour podcast as a guest? Well, click the application link below in the description of this video. We are always looking for cool stories, cool entrepreneurs to talk to about business and life. Click the application link below, and here's the episode, guys.
So it's like, don't pay them now, pay them later when they'll probably be higher.
Yeah.
Don't use the money now when it's worth the most, use it later when it's worth less. It's the dumbest thing ever.
Yeah.
It's so dumb, but like, it's what we're taught. And once you like try to change someone's like mindset, it's the hardest thing you can do, because they've been taught one thing. There's a quote by Will Rogers. It's the biggest problem in America is not what people don't know. It's what they think they know. That just ain't so.
Wow. That's deep. Yeah, because people are so programmed at this point. Years of programming.
It's ridiculous.
Public education system, the news, God knows what else. But yeah, it's pretty bad.
Yeah, so to break that is tough. I'm lucky and blessed that I broke like the shackles of the modern like financial system and all that when I was 34. So kind of late in the game, but I'm almost 39. So in less than 4 or 5 years, I went from having a net worth of about 200 grand, making like 117 a year, to now up over 6 mil net worth and making about 2 mil a year.
Incredible.
So it's like, you can do a lot once you know what to do, but then the most important thing is to just do it.
Right.
You know what I mean? Like, if you know what to do, but you don't do it, it's not worth anything.
Yeah.
You know?
Absolutely. So walk me through that process at 34. What triggered this mindset shift for you?
Oh man, I was at work and I was making, like I said, about 117. I think it was my last year there. That was 2019. And working my tail off. I'm just working and working and working. I got no time to enjoy anything.
What was the job?
It was mortgages.
Okay.
So I was doing refinances for Rocket Mortgage. Great company. I don't have anything against them, but just the fact that they controlled everything. So again, the more control you have, the less risk you have. So I had no control because they could just change a comp plan the next day, which they did all the time.
Right.
And I'm like, well, crap, now I'm going to make less. And if I make more, then I get taxed more because of bracket creep. I just started getting to a point where I'm like, I feel like such a prisoner on a long leash, because I could work from home. That was like the freedom they gave me, but I just felt trapped. And then I started seeing people like, I always liked those shows like Flip or Flop, people doing flips on houses. And I had some friends in real estate. We talked about it, a few like Pace Morby, Jamil Damji, people out in Arizona.
Yeah.
And I'm like, I think I could do that. So I just did a ride along one time and I fell in love with it. So this was October of 2019. I locked up my first real estate contract and I walked into Rocket Mortgage the next day and I quit. You ever seen that episode of the Chappelle Show when he knocks up Oprah Winfrey?
No, I didn't see it actually.
Oh, it's great.
Yeah.
He like knocks up Oprah and he walks into his job the next day and he's like, I quit. What's gotten into you, Dave? It's not what's gotten into me. It's what's gotten into Oprah. It's great, bro.
I gotta check that out.
That was me in 2019.
You walked in there and quit.
I just walked in. I was like, I'm quitting. I thought I was going to make like 200 racks on this one real estate deal.
Damn.
So I'm like, I'm quitting. Why would I stay when I'm going to double my income almost on one deal?
Yeah.
Let me spend all my time getting these deals. I didn't make 200 grand, nothing close. I learned so much though, dude. I was getting kicked in the teeth left and right. And by March of 2020, when it hit, I had done 8 real estate deals, 0 marketing.
Wow.
So I was keeping all the money.
Is this wholesale?
Wholesale, flips, and then my last name is Burr, B-U-R-R.
Yeah.
And there's a method of real estate, the Burr method. So it's buy, renovate, rent, refinance, repeat. It's a way to keep properties and build wealth and cash flow and all that. I'm like, my name is Mr. Burr. How about I become Mr. Burr? So then I made the chain, I made hats, I made shirts. I started like branding myself as Mr. Burr, and then started doing those, holding on to properties, building wealth. The market appreciated like crazy in Phoenix. So I had a bunch of net worth tied up in the equity. I sold off the properties. Now I had all this capital. I could start like really playing with money, deploying it in different things, private lending, infinite banking, and just started multiplying money.
And the cool thing is you're saving a lot, because a lot of people make money, but 40% goes to IRS. But
Right.
you figured out a way to save 40% basically.
I'm saving everything.
Yeah.
Because think about it. When you use infinite banking, at its core, it's a forced savings vehicle. That's what it is. Because think about it like an investment. You can lose money or make money, right? With infinite banking, it's a life insurance policy. Life insurance is guaranteed to grow. So there's no risk. It's literally a savings vehicle that's guaranteed to grow.
Right.
So it's always going to grow and you're going to save the money. It's going to become more. So I put all of my money towards it. I've got 13 policies.
Wow.
So all my money goes there. And then since it's going there, I'm saving all of it. It's all growing, guaranteed. And then I just use it to go do my investments. So like, let's say I save into a policy, easy math, $100,000. Let's say it grows at 5%. That made me $5,000 tax-free, right? If I can take that same 100,000 and lend it to you, let's say at 15%, that's what I lend at. That made me 15,000, right? So I made 5 over here, 15 over here. That's 20,000.
Wow.
Right? All it took me to do it was 5% control cost. Because remember, you're borrowing from the death benefit. So if they charge me 5%, which is what it is, I turned 5% or 5,000 into 20,000. That's a 400% cash on cash return.
Incredible. In a year.
And that's if you just do one deal. So what I'm doing is when that money comes back that I'm lending out, the interest, I take it and reinvest it. So now I'm just multiplying the money. It just keeps cycling through the system.
Yeah.
And that's how I've been able to build so much in the last few years. And money is a compounding thing. Knowledge is a compounding thing. The more you learn, the more it compounds on itself. So as I start learning more and utilizing it, the wealth just keeps growing.
Incredible. And you can lend at 10, 15% these days to hard money lenders.
All day long.
Yeah, especially guys in real estate, because they know they'll make a quick flip and make that back.
Yep. So I'm lending at 15 first lien position with a personal guarantee. So there's like no risk.
Wow. Yeah, if you have the lien, then you own the property, right?
If they don't pay you.
Yeah, so you really can't lose. Because worst case scenario, you get a house.
Yeah, and that's worst case for them. It's best case for me. You know what I mean?
Yeah, because the house is probably worth more.
Because, yeah, like let's say they do all the work, they fix it up, but then they stop making the payments to me. Now I've got a almost fully renovated house for, let's say I put $100,000 down. That's what I let them use. So, yeah, dude, lending is like the best thing ever.
Wow.
If you can do it correctly, in my opinion, it's the only way to get true passive income.
Lending?
Yeah.
Because people say passive income, but it's like you're not actually passive. You know what I mean?
Real estate's far from passive.
Far.
Dude, I've owned Airbnbs. That's what I did a lot of in real estate. And oh my God.
A lot of headaches.
Oh, bro.
Complaints.
Like I would get tenants that were like, "Where's the thermostat?"
That's so annoying.
It's like the question. I'm just like, it's this circular thing on the wall, about eye level, and like they couldn't find it. It was like it's the craziest thing, dude.
Yeah.
So
you got to clean the house. You got, God knows, people having parties sometimes.
Yeah. So my cleaners have found some gnarly stuff.
Yeah.
Like throw up in like the washing machine. Just people are savages.
Yeah. No, they are, man. But I'm glad you're at the point now where you're just making money with ease.
Yeah. I don't own much more real estate anymore on the Airbnb side. I own one. I think with rates dropping this next year, property values are going to increase. So I'm probably going to unload that property this year. But now I'm transitioning over to multi-units.
Yeah.
So we just bought a 22 unit out of Birmingham, Alabama.
Did you do subject to on it?
No. So I just used the Burr method.
Okay.
And I just used my policies to do it.
Wow.
So I put the down payment. It was $200,000 from a life insurance policy. So that $200,000 is still compounding in the policy. It's still there making money.
So you're making money 2 ways.
Twice. Technically 3 times.
And that's what banks do.
Banks do it all the time. Yeah. If you think about a bank, when you deposit money in the bank, it doesn't sit there. They lend it out.
Yeah.
But first they put it into life insurance policies. Banks own, it's called BOLI, bank-owned life insurance. They own more whole life insurance than all their buildings and land combined.
Wow.
Billions and billions and billions of dollars. Why would they do that? Is it because they're stupid? They know something we don't, right?
Rich, yeah.
So they're putting the money there so that it compounds and grows guaranteed. Then they borrow against it and lend it out to you on a car, you on a house, on a boat, student loan, whatever it is. You pay that loan back with interest while they're making money in the policy at the same time.
Wow. So they can't lose even if you don't pay back the loan.
No.
That is crazy.
And the way they're getting the policy is nuts. They're just insuring their employees. So next time you go into a bank, look around and see how many vice presidents there are.
Is there a lot?
Everyone's a vice president at a bank. They promote these people to vice president and give them like a fully paid up life insurance policy.
Yeah.
Say, here, you don't got to pay a penny into this life insurance policy. If you pass away when working here, your family gets 50 grand, 100 grand, whatever it is. How much is that policy actually for? $1 million, $2 million, $3 million? So if you pass away, they do pay your family 50 grand, whatever it is, but they keep the rest.
Wow. So they're making money off you dying.
Yeah, basically. So they could probably be real shady and start like plugging some people off, but the life insurance company's smart. They'd look into it and make sure that it was, you know what I mean?
Yeah.
So,
wow, that is insane. So basically you're saying owning a bank is just a money printer.
yeah, for the most part. But that's what I love about infinite banking is like you're doing the same thing as a bank does. You in an essence own a bank. You own a banking system. You treat money the same way banks do. Think about what a bank does. When you put your money on deposit, they have to pay you to keep it there, right? They pay you a little bit of interest, but then they take it and lend it out and make more, right? They're keeping the difference. So let's say they pay you 1%. I know they don't, but let's just say they do.
Yeah.
They pay you 1% and then they lend it out for, let's say 5%. They're keeping 4%, right? It's the same thing with infinite banking. You're borrowing from a policy, so you're paying them, but as long as you can take it and go make more than what you're borrowing it for, you're doing exactly what the bank does.
Yeah.
You're keeping the spread, but you're doing it in a place that's guaranteed to grow. It'll never stop growing.
Yeah.
And if that's the case, that means every single year you can always borrow more.
Wow.
It's like if your house was guaranteed to go up in value, you could always borrow more from your equity line. But houses go up and down, right?
Yeah.
Life insurance does one thing only, just goes up.
That's brilliant, man. Because I've taken out personal loans, car loans, 10, 20% interest. But with this method, you don't have to pay interest.
Yeah, you should, but you don't have to. Because if you don't, when you pass away, they'll just deduct it off your death benefit.
Got it.
But you should, because when you get one of these policies, it's a mutually owned company. That means that my 13 policies I own, I'm a part owner of those businesses, of those companies. So when they're profitable, they share those profits with me in a dividend. See what I'm saying?
Yeah.
So it makes sense for me to pay my interest to them because that's helping them be profitable. And plus I can write it off as a tax deduction. So like, let's say I owe 10 grand in interest for using the money throughout the year. I just write a $10,000 check from my business bank account and I can write that off as a tax deduction because it's a business expense.
Wow.
See what I'm saying?
Yeah.
And then it helps the company be more profitable. When they're more profitable, I get a bigger dividend, which I can then use tax-free.
Brilliant.
See what I'm saying?
Love this stuff, man. Where can people watching this learn how to set this up, and where can people find out more about you?
So you guys can check me out on social media. The biggest one is my Instagram. It's Mr. So MR_Burr, B with 4 R's. So BRRRR. You can check out my YouTube. I'm trying to grow that right now, but I am a licensed agent. I became an agent in 2021 when I started teaching this stuff, and everyone wanted to learn about it and do it. So I was like, all right, why don't I just be the one that sets it up? So me and my team can set it all up for you. Happy to do it. And we set it up to where you guys can use it exactly how I use it. And then we teach you how to do it as well.
Perfect. We'll link that in the video. Thanks for coming on, man.
Of course, brother. Appreciate you.
Yep. Thanks for watching, guys, as always, and I will see you tomorrow.